Hi everyone. Today is Thursday, January the 30th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. The FOMC and Chair Powell yesterday decided that rates are going to sit where they sit for right now, and that's just perfectly fine. Market really didn't respond in any kind of meaningful way moving forward. They simply were reflexive. So here's what we want to jump right into. Today we've got GDP, jobless claims. Not so big employment situation is going to be far more important, and that's coming next week. And so as we stare down the E-mini S&P 500, that is the ES instrument, we can see that on January 27th, we made a very large candlestick move, the low of 59.47, the high of 61.04. Every move into that area, including this morning, which is a total of 4 trading days, what we are seeing is a rejection at that level. I believe we continue to see it, although it may breach past that liquidity and fill the gap at 61.23. As long as we hold the midline of this gigantic candle, which is down here at 60.28, that's 6,028, we are going to have buyers come into the mix. We've got a mishmash, upward trend, downward momentum. So we are slowing, but still in upward path. So what does that mean? It means dips are buy zones. What is the first dip to look at? I like looking at 60.65. My thought is the following. Above 60.65, we've got bullish action. Below 60.65, we have bearish action into support where the traders will try to bounce it again. Now, is there an instant when that support edge can break and send us further down? Absolutely. So how do we respond at these go, no-go events? We wait for them to stabilize on a 5-minute, a 15-minute that gives us direction. We want to see a positive hold of the area and retracing up the candlesticks, or we want to see a failure of that area and move down. Don't just rush in and put a limit order at 60.29. You can move it into a very tight time frame and watch the traders see if they can build some structure on the base. But that is what we're looking at. If we stare at the 1-hour chart, we can see that we're quite sideways, potentially into the GDP, which means that dips are buys and spikes are sells. And so where should that spike-ish action be? It could be 61.08 to 61.11. It could be all the way up at 61.28, which is our point of control for this volume zone. We are dancing around the VWAP of the region, and that means it's going to be very sideways. But if we stare down trend on these tighter time frames, we can see that we are setting lower highs and lower lows. So as it looks with momentum down and trend flat, we are trying to flesh out where support is below, which will give us that buying formation. On the hourly chart, it shows that 60.65 is an area to clear. But if we look down and we're trying to catch the bottom, that number's down at 60.41. That's what we're looking at. All right, let's go to the NQ. You know, we are measuring the Fibonacci's of the candlesticks that are the widest range of the day to see where we've been trapped. And so have a look. This candlestick, also on the 27th, 50% range, 21,267. It was broken and held. So our job, if we're looking at this big candlestick, is to say, all right, it might break, but when it recaptures, I'm headed there. I'm going to take that trade. And so that gives us the long. Yesterday's candlestick retraced almost all the way to the open of the prior day. That was at 21,361. And then it closed just above the close of the prior day. So that was sort of a doji style day. We are lifting. We have higher lows and higher highs. So we're building some kind of flag pattern. Big picture tells me momentum is flat to slightly up. Momentum is down. Trend is flat to slightly up. That means big bounces they're going to find themselves sellers up at the top. Where is that high end of the seller range? 22,102. We'll keep our eye on that. This morning, however, it seems like 21,770. So if it blows past that, it might catch a bid for a couple hundred points, but then it's going to fade and come back into relative support. And I like that support area at around 21,632. Where is the go, no-go on the daily chart? It's 21,267 with a whole lot of noise right around there. You know, I like to call it the rock fight area. Intraday, here's what we're looking at. Same sort of thing. Downside momentum, sideways to drifting up trend. And so dips are going to find buy zones. Where's the go, no-go today? Well, look at how sloshy this area is at around 21,528. That's a mess. I mean, it's a real mess. And so my thought is clearing over that area is really going to give us some pressure. But notice, every time it comes up, it collapses. Every time it goes down, it bounces. So the real go, no-go, in my mind, is this 21,360 area. As long as it pulls back here into this 21,400 zone, 21,385 zone, buyers have been coming in there hot and heavy in the range. So we sit very far above that right now. It could be that we're going to retrace it, but we are still bouncing off of these moving averages and the VWAP. So dips into this 21,528 area. As long as we don't break it, we're going to have buy zones. So intraday, 21,528 is the go, no-go line, but it could get very sticky. So wait for it to show you its real hand. All right, here's the YM. Let's take a look. Oh, this is perfect. Very big range, breakaway pattern, right? It came into the area at 44,945, and the following day it went right up to 45,176. And then yesterday it was essentially an inside day. Today it's losing the 50% range of this breakaway candlestick formation. Momentum is showing crossover. Trend is up, but the moving averages are pretty far away, and volume pressure events are way down here at 42,000. What do I think? I think we fade into frontline support. Notice these savage moves, right? We're in some kind of rotation event. People are digesting tech and the like. Tough days moving in and out. You definitely don't want to buy these big moves without going, all right, I'm looking at the last area of resistance and I'm taking profit. If we go to the daily chart, beautiful. We can see this lovely breakdown. Look what gives us this knowledge of the break. First thing, sideways pressure event tells us the spikes are going to sell if they're on the upside. The spikes are going to buy or if they're on the downside. So here comes the next spike, 44,767. Does that mean that price action will naturally hold this? Well, I would contend the force of this move doesn't look like this momentum here. This momentum is flat to sideways. It shows a little bit of downward motion, but it's not steep like this. This is quite steep. So it's very likely to break 44,774. And that is, to me, the go, no-go line today. If it bounces up and holds that zone, recovers it, long action into the moving average unless trend takes shape and reverses. That's what we're going to be staring down. The pullback into this zone gives us that buying area. We wait for it to stabilize on the 5 or 15-minute time frames, and then we trade it back up into relative resistance, which is round about 44,990. At this juncture, however, it is certainly looking for a floor of support, and that could easily be 44,760 or so, but also 44,600. All right, just watch the levels, and you can also use your Fibonacci's for these hourly candlesticks. Notice this candlestick didn't retrace 50% of the prior candlestick, which told us, hey, listen, I might have myself a little problem with momentum. Same sort of thing, double topping action, still working here. Notice yesterday I said, hey, if we can get As long as we can stay, here's this candlestick, right? As long as we can stay at the 50% zone and above, we'll have ourselves buying pressure. No chance. Rejected it yesterday, almost on the nose. Pull back to the bottom. I said, hey, if we hold this 99,700, 99,800, you're going to see buyers come in. That's actually where it gapped down and then opened and then just rode up the entire day. What's happening today? We're battling that 50% range. If we get up and stay up over 105,000 and you want to slip into a tighter time frame to see what's going on, to say, hey, here I am rejecting my 105,000 again. What is slope and momentum telling us? Slope is up, momentum is down. That means dips are likely and they're going to present buyers. So where is that number? My thought, it's around 103,000. 103,500, best place to wait for a pullback. If you really want to sit at some other heavy congestion, I would say 103,898. And that would give you the bullish action, but a ton of sellers up here at 105,000. So be very careful holding your longs if you stop closing higher, right? If you do it once, fine. You give yourself support of the candle below, fine. If it does it again, it breaks that candlestick, you're going to have a problem. Right now, it's testing the candlestick. So there are buyers that could easily come in here. The VWAP, the moving averages, buyers are going to set up right at this 105,000. Whether they hold or not is going to be a point of momentum. And so first pass, that's a dip buy, run up into resistance. If it doesn't clear 105,520, you've got yourself a fade to the downside. And then we're back at, 103 and then 101. 103,000 and 101. All right, let's take a look at oil. Daily chart, big fade off of that 80. Just like we said, here's heavy congestion, right? Here's our heavy congestion. If we take a look at the major wave, let me draw Fibonacci here. We take a look at the major wave between these two guys. Where's our 50% line? Right here, 72.34, right? Notice what's happening. See how buyers are coming in? Look at the slope. Look at the momentum. It's going to be a little bit of a rock fight here. But this is a very likely buying pressure event, especially if we can dip down into 71.44. I think that's a really sweet spot to get engaged with only about 15 cents of risk. So $71.44, $72.04 looks pretty good. But if it cannot get up over $73.30, you're to get out of Dodge, because this trend on the daily is very steep. If we take a look at the hourly, we can see the same thing. What is this slope? It's down. What's momentum? It's up. So what does that tell us? Well, if momentum is up, it means that my price action easily could bounce. It's going to bounce into resistance, and that resistance area is around 73, and then it's going to rotate downward. Look at this. Here's the nearest resistance area, 72.70. What's it doing? It's fading off of that level. Why? Because slope is king. Slope is king. Momentum is a derivative of slope, which is a derivative of price. So it's a second derivative. And the moment you start focusing on second derivatives to tell you about where price action is going, you've got a lot of muddy water there. Okay? So price is always master and commander, but slope is king in terms of technical indicators themselves. So watch that area to come in. If we hold a higher low and momentum keeps high, the moving average will start to flatten. That's what's happening. Pullbacks, going to be buy zones here as long as this Keltner channel turns to the upside. Let's take a look at gold. They've rolled the contract. It's in beast mode. Literally, it's up almost. It's up $200 from the last really great buy zone, which was 26.23. The next great buy zone was 2740. Then we broke 2770, and now we're breaking out again. So, which wave are we going to measure? Or which rotation are we going to measure? We could measure this one. That's the largest one. It had an inside candlestick formation. And here is the 150 to 168. I suspect we see sellers here. I do. I suspect we see sellers right there at the 26, 28 zone. Or excuse me, 28, 26 zone. That's really it. And then, let's see what wave we want to measure next. Let's see which one coincides. Yeah, they're all dancing around this 28, 26. Let's use this crazy one. Oh, about the same size. Isn't that interesting? Yeah, so 28.26 to 28.42. That's the upside pressure event. Here's the rub. If it comes into 28.10 and starts fading, it's now on the inside of the candlestick, which means support ledges should be at the halfback, which is 27,795. 2,700. Man, am I getting these numbers wrong today or what? 2,700. Okay. Here's what we've got. Gap up, moving straight ahead, very strong momentum, very strong trend. See this? No curvature, straight up. That means dips or buys. Dips could also be shallow. That's what this tells us. Dips or buys, but dips could be shallow. So what does that mean? You look at maybe the 25% retest of your candlestick formation and hold that. If momentum is steep like this and you have trend. I do believe it's coming into an exhaustion space, so I absolutely think this move is done for now. So we'll be looking for a rotation back into 28.10 to consider another buy zone. Do you want to short that? You can. Just wait for a topping formation or something that gives you structure that tells you you've got to fade. What is that? I fail to close higher. I break frontline support. My bounce does not head higher. And this bounce headed higher, but it didn't close higher. So that's a little anomaly, but it can work in your favor. All right, SPY. Hourly charts. We'll jump right into them. Here are the numbers for today. Go, no go, $600 is the, as long as there are buyers there, we've got upward price action. Is this sideways? You betcha. So what does that mean? Don't buy here at 605. Don't buy here at 603. You buy down here under this structure. Is momentum high? Yeah, it is. So we know they're buyers down here. They could come in as easy as 601, but if you lose 601.60, but if you lose $601, it's got, another 60 cent fade on it. I do not like these formations unless I'm participating on the edges. And then I have a tight stop and a small size. Okay? You'll be able to see me on Fast Markets on Top Step TV today. And we'll be talking about things like this. If we take a look at the Qs, same sideways formation, slope a little bit more favorable as this is trying to come back. But see this? This one candlestick here from days ago. Look where the traders, look at this. See the 50? That's the 50% range of that particular candlestick. They dance around it. You got to stare these down. Remember what these 50% levels look like. It pulls back. It holds just shy of it at 517. If you'd been waiting with a limit order at 516, it would have left you in the dust. But you know what? That happens. So you watch it hold, and then you go, next time it comes into 517.40, I'm going to take it. All right? Where is the go, no-go? I do believe it's $517.35. Above it, dips into that area, give you buy zones. Below it, we've got a structural change, and we slip into 510. What's above us? 525, value area high. Top of that strange candlestick, 529. All of that could happen. This wick action here, I think we're going to see a lot more wicks over the coming days/weeks. So be careful, and I'll see you on the streams.